Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwi Bank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it. Kia ora, welcome back to the podcast. Today's episode, we're taking a look at how sort of businesses are sort of feeling on the ground. We've had some recent survey data come out, the NZIER's quarterly survey of business opinion. That's one of our sort of favourites to look at to see how businesses are feeling. And off the back of that, we thought, why don't we get someone from business banking on the potty to kind of give us a few more insights. So we've got Greg Byrne on the podcast today. He's the General Manager of Commercial Banking. And we've never had you on the podcast before, Greg, so this is exciting. Why don't we just start off with you telling us a bit about your role?
Sure. Thanks, Sabrina. Jared, nice to be here. My role, I look after a band of relationship bankers in the commercial or mid-market, doing transactions for growing businesses, north of Taupo specifically, as in my role as Commercial North. I have a colleague that's looking after the southern part of our company. I also look after a business called Asset Finance. Asset Finance is specialising in the productive sector, financing yellow equipment, plant particularly. And thirdly, a business advisory business, which we're looking to support brokers, support growing businesses. So that's the role.
That's a lot. So I think you'll be more than well equipped to answer a couple of questions on how businesses have been faring. I think the last time we had a guest on from Kiwi Bank to sort of talk through how Kiwi businesses were feeling was actually almost a year ago. Yeah. We had Elliot Smith on, and it was actually before rate cuts had started, I'm pretty sure. So a lot has happened since then. You know, we've had 225 basis points of rate relief, but at the same time, things have also kind of gone up in flames and madness with other parts of the economy. I guess the global economy, you know, there's lots of geopolitical tensions, a lot of uncertainty out there. So, Greg, how are businesses comparing to last year? How are they comparing maybe to the start of the year? And how are they feeling for the future?
That is a lot in that question. I'll start with just the sentiment currently. So I think there is a genuine sense of optimism. Despite caution, I think businesses are genuinely starting to look to the future with a degree of confidence. I think the trade tensions, even very recently, have started to ease. That's given a sense of confidence, particularly with our primary sector performing so well currently, and that tends to flow through the economy. That's not to say that businesses are not feeling they've gone through an immense amount of pain, and input costs and the benefit of reduced interest rates are yet to really flow through. So we're still at that really interesting phase of, I think it's getting better. It feels like it's getting better, but it's yet to convert to revenue increasing, stability in the employment market, and a number of other kind of factors.
And when you look across your client base, does it reflect what we're hearing? You know, doing really well in primary agriculture, everything else is a little bit soft, or are there some other bits that are popping up?
Yeah, remarkably, the commentary that we're reading about that dominance on the export markets with primary certainly playing out. And we look more to the rural-based economies, the Waikato, Northland, particularly in my area, and that sense of growing confidence. So yes, the sectors that we certainly are feeling pain, retail have got a long way to go. Hospitality is still not through the woods, despite underlying tourism, and there's a real sense that tourism's starting to lift, but it's yet to flow through into those sort of hospo retail trades. From another industry standpoint, sectors that support the housing market and commercial market, such as construction, we're still a good shift away from feeling any sort of prosperity. Yet, that's not to say that people in that sector are not in reasonable shape from a capacity sense, but they seems to be an apprehension at a confidence level to invest and to really get on with projects, which is very similar with infrastructure.
Yeah. I mean, we're hearing that, and we've seen it in the data, aren't we? You know, exactly what you say.
Yeah.
Confidence is improving. Not really seeing it quite in the activity data yet, as well. But I think, you know, your part of the world's like the canary down the coal mine, right? When you start to see, I think, you know, asset finance picking up, and in particular, that's when we'll know. So it just sounds like we're not quite there yet.
Well, some encouraging signs, Jared. Last month, we had a record amount of productivity coming through that asset finance book, which gave us a sense of, okay, we're away. They're using the taxation benefit that's recently been announced with the 20%. But when we probed that more deeply, in actual fact, the funding that those individual customers were looking for were more anchored in transactions and opportunities that existed well before government released that policy. So you could look at that in two ways, I guess. The power of that legislative change hasn't had the impact yet. Equally, it's encouraging to see that we're getting a sense of building optimism among some infrastructure projects and the necessity for some more productive assets.
So kind of what you're saying is that those firms that were probably looking to invest already, they've kind of, that investment boost scheme has really helped them just jump for it, and then others are just still holding back.
I guess what I'm saying, it's patchy. I think there were some elements that would have proceeded irrespective of that stimulus from that government package, but equally it's not broad-based. And we had a particularly good month. That's encouraging, but 1 month doesn't make a trend.
Well, what you're saying is sort of playing out in the numbers that we're seeing, you know, investment intentions. I think after 13 consecutive quarters of being in decline, I mean, there was one temporary spike during post the election, but basically 13 quarters of investment intentions of being in decline. They're now back in positive, you know, mainly just for your plant and machinery, nothing really in the building space just yet. I think businesses are still looking to get out of that kind of investment. But that is promising. And that theme about, you know, being optimistic for the future, but reality still hurting right now was definitely a very clear theme of the report that we saw last week. I think something that was really interesting in last week's report was around the sort of cost and price measures that we're seeing in the economy right now. So cost pressures, they did come off in the most recent quarter, but they're still pretty elevated for businesses. But then on the other hand, you've also got your pricing power is really diminishing. We saw that that's still decreasing. And actually what was really interesting is that looking ahead, a net 2% of firms are looking at reducing prices in the coming quarter. Now, that is really rare behavior. You usually only see it during recessions. So the last time we saw it was during COVID, before then 2009. From when I look at that, I see two things. So one is quite alarming for business profitability. But then from an economist's point of view, and with inflation being a really big discussion point right now about how it's lifting back up and whether the Reserve Bank can deliver more rate relief, I also think, oh, well, at least we can say, you know, the inflation beast, it's not reviving, it's still tamed, but it's really tough for businesses on the profitability side, right? So what are you kind of hearing in that space?
Well, one anchor that we're seeing is people are still striving for revenue, let alone profitability. So the underlying sense that a lot of the sectors are trying to pay the rent, keep their teams engaged, connect with consumers. It's challenging. We're going through a winter. Underlying sense of consumer confidence isn't where I guess we would like it. House prices haven't taken the material lift that everyone was hoping for. So those pricing reductions are more, I think, to be anchored in trying to be more competitive in the market and trying to outcompete their relative contemporaries in the local market space.
Feels like there's, like you say, there's a they're trying to just get the revenue, aren't they? Before worried about
first and foremost.
Yeah, absolutely. And when you talk to businesses, even in the survey that you're talking about, the business confidence survey, you can see that the thing that concerns businesses the most is the demand for their product or service, or and that has been steadily increasing, right? And to me, it's like, okay, that's a soft consumer, that's a soft business and environment that's yet to turn.
It's fascinating. You get a sense that people have been holding back on spending, right? And that they're looking forward to, like, okay, we're through it, we're over it.
Yeah.
But then when you look at underlying costs that people have endured for quite a long period of time now, be it primary food or electricity or gas, or don't feel that sense of consumer confidence, which is having the real material impact on the likes of retailers and hospo and domestically.
It has been a cost of living crisis, which we thought would be ending by now, but it's just continuing, isn't it? So, we are in a situation where households are forced to spend more and more and more on essentials, particularly the high frequency stuff, like the food, that stuff, not so much the rent's easing, but it's hurting.
Rates, insurances, the underlying expenditure to run a household, there's been very limited relief. And consequently, people are not relaxed about it.
No. And, it's feeding through. So we had a customer come on the podcast a little while ago, a courier guy, and he was just saying, things are still pretty soft out there. We are optimistic, but things are still soft.
Yeah, which is fascinating, right? And it makes me think about mindset, because frankly, I think optimism's a really big thing that's going to get us through, and particularly business owners and people that have been in this space. And we talk to a great many of them, and trying to encourage that sense of optimism is potentially the differentiator between whether if we think we can get through, we can get through, we take measures and we connect.
Yeah.
That is a really important factor. And certainly as bankers, we're trying to be super supportive and be there with businesses through thick and thin. But that creates an underlying sense of optimism and confidence. So stability is important.
Yeah, absolutely. And I think, I'm certainly noticing that, if I speak to a room of 200, 250 people, when I was in Wellington, only a handful put their hand up saying, I'm looking to increase headcount in my business. I'm looking to invest. That was, I think I had 10 hands out of 200. Went to Christchurch, and it was like 30, 40% of the crowd putting their hands up. So very different depending on where you are.
Yeah, it's patchy. It's fascinating, right? I mean, we're seeing that Central Otago space, Queenstown, Christchurch seems to be on a genuine roll. Equally, I'm not suggesting we're in a downer up here. The provincial economies are certainly giving a sense of optimism more locally. But when we look at that major part, that Auckland piece of this country's economy, and we're not flying. We're not flying. Housing, all the minor factors that contribute to that sense of optimism and confidence, and people getting their wallets out again. It hasn't really kicked. That'd be our view.
And Auckland's massive. Just for any international listeners, like Auckland is 40% of GDP, 30-something% of population. So it's a pretty big city when you compare it to other cities elsewhere.
Interesting and positive factor, with net migration, the New Zealanders that are arriving has created capacity opportunities for us equally. So when we hit go on infrastructure, when we hit go on some of the projects, as long as we get the skill sets correct, as long as we get the right balance of New Zealanders with the different professional competencies, we're confident that we can really get moving again. there are a good many of very qualified people with good balance sheets just waiting for the market to turn, per se, for the opportunities for the moons to be aligned, so to speak, so we can actually get on with some of the undeveloped opportunities that genuinely exist across the motu.
Yeah, I hear that. As you know, when I do speak to these large audiences, and people come up to me and go, you know what, I appreciate your optimism, but this is what I'm seeing. It's like, okay, so you're in the herding camp, and then I'll get a couple, and I do mean a couple, that will come up to me and go, you know what, now's actually the time. Now's the time to do this. Now's the time to do that. I had a developer speak to me the other day, and he said, look, you know, I can actually come up with a timeline to build something. So I couldn't do that for years. You know, things always get blown out. I can give you a firm date. You know, we can build this in 9 months, sort of thing. And I've got my choice in subbies. He said, you know, I can get whatever trades I want, plumber, electrician. He said, right now is the time to build.
100%.
So, you know, those that, as you say, have that balance sheet, have that capacity, you know, I think they're looking.
Well, and there's legitimate opportunities. It's been a long time since we could look back and say, whoa, capacity is available right now.
And just on that note, with the construction sector, the building sector, out of the survey we saw last week, they were probably the most looking at reducing prices in the next quarter. So I think they went from, in the previous quarter, a net, net 3% were raising prices, and now looking ahead, a net 35% are looking at decreasing prices over the next quarter.
And so that's helped by a lot of things, though, right? There was that shock that we had, the inflation shock, but construction costs lifted 20% in a year. It's like, wow, and they haven't come back down. They're just not increasing as much. But then, you know, talking to a few of these developers, they're saying, like, you know, the price of steel's down. Price of jib, price of this, price of that is actually down. So, you know, maybe they're passing that on.
Supply chain seems to be supporting that also, just in terms of global traffic. By and large, the wait times to get specialist product, be it high end or, seems to have dissipated somewhat, and getting through our ports or our airports are manageable. So people that want those items that are more high end, they're accessible. So once again, it's just a matter of let's get on with it if it's the right time to get on with it, and there's still that apprehension, it's fair to say.
And what, in your world, you're obviously, you know, looking at doing business with a variety of customers. What are some things that you look at and go, oh, this is a good time, this is a bad time? What are some of the things that I guess you watch, monitor?
Well, demand is a key thing. I mean, if ultimately all businesses have to have a customer, has to have an end user, and to legitimize the investment for growth, and growth is probably the most used word this year that we've heard anywhere, be it from central government to local to just people wanting to pursue and get on with it, get over the hump of inflation and the negatives we've had, and with some optimism, growth is the key thing. So if we can look to, number one, you know, a good customer base, number two, a well-controlled means of producing a product, number three, we always look for great leadership and management. That competence is just a truism, and frankly, it's where it really starts. The ideation and the flair of an owner, operator, manager, leader is the whole essence of it. Then everything connects from there. And I try and generalize, because I'm not trying to go specifically down a rabbit hole within a specific industry per se, but if you get the management right, you get the process of the output correct, you're in the right target market at the right time with the right customer. Those are the fundamentals that we really look to pursue.
And we obviously help our clients do that.
That's the differentiator, having capable people that have a view of why we exist, to support local businesses to succeed domestically or internationally. That's the fun part. That's the reason that we engage, and we've got the doors well and truly open. And the reason that we're growing at the rate we're growing is we're putting that on the track. We're actually supporting local business.
Last time, almost a year ago when we had Elliot on, I think business banking had quite a year. What was it, 7 times system growth? How's Kiwi Bank doing this year?
Yeah, we've had a very similar growth trajectory, thankfully. We've increased that. I think we've closed the financial year. We've just closed the books, 30th of June, and we will have had on the record a 9 times market share.
Wow.
Which is a staggering growth multiple against some fabulous banks. I mean, we're fortunate to live in a country that's got a very stable banking system with very profitable and worthy competitors. And to achieve that speaks a lot towards our aspiration to grow and support New Zealand business with capable people and a board and executive that recognise for New Zealand to succeed, the business sector needs to be fueled. And thankfully, we're certainly on a mission to do that.
Yeah, absolutely. And it's so important. The Reserve Bank gives us data and some pretty good data actually that shows you not just the demand for credit from the business, but the supply of credit from the banks. And, over that 2020, late 22, 23, 24, it was a long time when both of those were negative.
Yeah, true that.
Right? So obviously you've outgrown throughout that whole period, but then I've just noticed, I think it's in the last 6 months, bang, that data, that survey that the Reserve Bank's done, everyone's turned around and it looks like the tap's back on. So that's gone from being a macro event to me when the supply of credit is tightened up. That tightens your economy, right? It's like the oil and the economic engine. Now it seems to have been turned on across all banks.
Yeah. No, undoubtedly. It's an exceedingly competitive market right now.
Yeah.
Everyone's back. The nice thing from our standpoint is I think we've demonstrated that we've always been on.
Yes.
So for as long as we've existed in that business frontier, we've tried to be consistently available with a setting that we're open for business and we want to grow.
Yeah.
That's not to say our competitors aren't similar. But let's say we've clearly done something right and connected with a marketplace that was looking for support.
Yeah, absolutely. I think we've heard it. I hear it when I'm on the road, particularly businesses who were doing it tough throughout COVID or coming out of COVID. The doors were shut to some of these businesses, and ours were open, and they won't forget that.
Well, that's the whole essence of sticking with in partnership businesses through thick and thin.
Yeah.
There will always be businesses that'll grow at different rates and have difficult times at different periods. If we can see through the peaks and the troughs and be consistent in our decision making, our appetite, our thinking, I think that'll go a long way. And I think that's been our aspiration right from the genesis of setting up our customer business segment.
Yeah. Fantastic.
Well, I think that probably wraps us up, but that was really insightful. I love when, your anecdotes perfectly match the data you saw like a week ago. But I think if there's one really key message is that, positivity is building for the business space. But, it's still tough out there. It's still tough times right now. With each day, things start to seem a little bit better. We get a bit more rate relief, but there are these challenges still really hitting the business market and just the economy in general. We're probably not going to see a real takeoff until we see the housing market recover. The labour market itself is also really restraining consumer spend and growth and demand. So, all in all, this still points to our call for a need for lower interest rates. So, we're hoping and banging on the table for some more. We've got a review this week, so it'll be interesting to hear from them, and we'll probably touch on what the Reserve Bank say in our next episode. So be sure to tune into that one as well. And as always, like, follow, and subscribe, and we'll see you next time. You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.
Any views or information shared in this podcast, while given in good faith, aren't necessarily the views of Kiwi Bank.